Why all the hoopla around the Federal Reserve? Well, hi, everyone, and welcome to Tampa Bayside Brief, your Florida real estate update, brought to you courtesy of Todd and Paula Diesel, licensed realtors with Remax Bayside in Apollo Beach, Florida. I'm Todd Diesel, and I have the distinct pleasure of discussing the Federal Reserve and why interest rates have been so stubborn to come down. The latest inflation report showed that the U.S. economy is healthy. In fact, maybe a bit too healthy for the Federal Reserve. Now, whether you carry credit card debt, student loans, intend to buy a car, or would like to buy a home, you're eager for the Federal Reserve to start cutting rates and lightening the heavy burden on borrowing. The Fed's cautious approach to cut rates comes with some risks, including weakening the economy or launching it into a recession. So let's step back for a moment and answer the question, first off, what is the Fed and why are they getting all the attention of late on the news? Well, the Federal Reserve is a 12-member board, and among them, the presidents of 8 banking districts that we list here. These guys meet 8 times a year to determine monetary policy and to set interest rates. But the big question is, set interest rates for who? You see, that's the thing. They set rates for commercial banks that borrow from the Federal Reserve to meet their reserve requirements or to address a temporary funding problem. They do this in what's called the Federal Open Market Committee, FOMC, and they review economic and financial conditions, trying to determine the appropriate stance of monetary policy and to assess the risks to its long-run goals, which are plain and simple price stability and sustainable economic growth. All other interest rates that we live with, we run into every day, including new home mortgages, are impacted by the Fed's decision. So a few months back, we showed you what a 1% difference in rate means to the mortgage payment on a typical $400,000 house. Well, here's another interesting statistic. A 1% drop in mortgage rates will bring back 5 million additional qualified home buyers into the real estate market. So just think what this means for a market that last year only saw 3.78 million existing home buyers. So I leave you with this today. Help is on the way as rates are expected to moderate later this year. But in the meantime, if rates are holding you back from home ownership, contact us as we have options that could benefit you before the market becomes so hot once rates fall. I want to thank you for joining us today, as this is Todd Diesel bidding you an enjoyable day on behalf of Paula and myself.